Welcome to the Prague Finance Institute podcast. We are thrilled to have Mr. Marc Faber with us today. Mr. Faber is a renowned Swiss investor, author, and economic commentator. Known for his contrarian investment approach, he publishes the Gloom, Boom, and Doom Report and has made many correct calls on major market events. With extensive experience in global markets, Mr. Faber frequently provides insights into economic cycles, asset bubbles, and geopolitical risks. Joining us today also Mr. Mikhail Stupatsky, who is the head of research of the Prague Finance Institute. We are excited to hear Mr. Faber's unique perspective on the current state of the global economy and what lies ahead. Mark, thank you very much for joining us. My first question to you: how is life in Thailand?
Well, thank you very much for having me. And it's an honor for me to be with you and to express my views. I'm not sure that all of my views will be welcome, but that's life. Life in Thailand is interesting because, as you know, many Western commentators essentially call Thailand a failed state. In other words, an economic system, an economic society that doesn't progress, but actually stagnant. But at the same time, the country is one of the most popular tourist destinations. I mean, people love to come to Thailand. They all say that it's a wonderful country, that people are friendly, and that it's very safe. It's safer to walk on the streets of any city in Thailand than on the streets of Paris, London, Berlin. That is a fact. And number two, there are lots of people, they come to Thailand to retire. They worked their lives in Europe or the US or Canada, but they prefer to retire in Thailand. So you have this paradox, and this is characteristic of economics, that the statistics show one thing, the reality is another story. And the statistics show that Thailand is not a desirable economy, but the truth, the reality shows that people love to be in Thailand and love to live here. Maybe the definition of failed state should be overhauled and changed.
Thank you, Mark. This is an interesting observation about countries that are deemed to be failed states, and
Yes.
and life is so beautiful. I'm gonna give the floor to Mikhail to start our podcast to ask you your opinion about financial markets. Go ahead, Mikhail.
Many thanks, Andre. Mark, we would like to start a discussion about financial markets and especially global stock markets, which had a very good run in previous 2 years, 2023 and 2024. Very excellent gains were recorded, especially by US stocks, technology companies, these magnificent seven. So I would like to ask you, what is your investment view on global stock markets at the moment and the outlook for this year, 2025?
Well, my view is very simple. Like always, the markets are very complex because, as you said, the Magnificent Seven in the US and related stocks and semiconductors have done very well. And then the rest of the market hasn't performed. The value stocks haven't performed well. And in emerging markets, we had actually poor performances. So if you look at the period 2010 to today, what is striking is the incredible outperformance of US equities driven by the Magnificent Seven and FANG stocks, and the underperformance of emerging economies, as well as European stocks. Last year, European stocks did better. But in principle, for the last 10 years, they have grossly underperformed the US. So we are dealing with, like in economics, we're dealing with two economies. We have the economy of the rich people that benefit from asset inflation, and we have the economy of 70% of the people who do not have assets in a significant way, and they've been lagging behind because their cost of living increases exceed, the cost of living increases exceed the income gains. So in real terms, actually, incomes of normal people, not, again, I'm making the distinction between the super rich and ordinary people. Ordinary people have been suffering, and they are worse off than in 2017, 2018, 2019. So the markets are similar in the sense that we have a narrow group of stocks that have performed superbly, and then the majority of stocks, including, say, mining companies, they have performed miserably. And that is very interesting from my point of view, because I'm negative about the Magnificent Seven and these popular stocks in the US. The most popular stocks held in individual portfolios are Tesla and Nvidia. And both companies are of questionable value because we don't know much about the future value of these companies. And also we know that they're very highly priced. So they're priced for perfection, but we don't know much about their future. Now, the rest of the market, which is neglected, say emerging markets, including also Latin American markets like Colombia, Brazil, Argentina, and so forth, they are now, in my opinion, becoming relatively attractive because they've been going down, and there is value now in these markets, whereas the Magnificent Seven, I would avoid, I would sell them.
Okay, thank you very much. And what do you think at the moment about Chinese stocks? Their average PE ratio is, I believe, around 10 or 11. So that is a very significant discount compared to the US S&P 500. And at the same time, as with Europe or the rest of the emerging markets, Chinese stocks have been really significantly lagging behind US stocks during the last several years.
Yes, the Magnificent Seven in America, they have a stock market valuation that is higher than the stock market of China. I mean, all the exchanges combined, and Hong Kong and Taiwan. So, you're dealing with a huge valuation divergence. And I, as a contrarian investor who likes to buy what nobody likes, I like Chinese stocks, but there are different ways to play it. You can buy Chinese stocks, technology stocks or value stocks, and you can buy Hong Kong shares that in a Chinese stock market rally would probably outperform, especially Hong Kong property shares, because they're selling at a huge discount to the net asset value. Now, the net asset value will go down because property prices in Hong Kong will not go up in the near term. But I think that the media in the Western world and the politicians are excessively negative about Hong Kong, the outlook for its property market, and excessively negative towards China, when the whole world actually needs China because China has a huge industrial production. You understand? As an example, China produces more cement than the rest of the world combined. So it's a very important industrial power. And if China didn't exist, I can assure you that all the goods that we buy would be significantly more expensive, significantly more expensive.
Yes, definitely. I agree with you. And now moving to bond markets, fixed income markets, and especially US government bonds, US treasuries. There has been a quite interesting development since September. The Fed cumulatively decreased Fed funds rate by 100 basis points. However, 10-year yield, US Treasuries yield increased by 100 basis points. So the slope of the US yield curve significantly steepened. And at the moment, the yield on the 10-year US Treasury bond is approximately 4.7%. What do you think the market has been trying to tell investors during the last several months in this regard?
The market is telling investors that central bankers are idiots. Idiots. They cut the rates in an inflationary environment. You and I, as a bond buyer, want to see tight money. And we want to see that the government or the Fed or the authorities are determined to kill inflation. That is what we want to see. We don't want to see easy money, plenty of liquidity that will fuel inflation. And then, of course, we have to define what is inflation. For the US Federal Reserve, inflation is when the price of potatoes and carrots and other food products go up. But for me, rising property prices, rising stock prices are a symptom of inflation as well. It shows that there's plenty of liquidity in the system. Otherwise, Bitcoins wouldn't go to 100,000. You understand? So basically, the Fed controls short-term rates, but they don't control the long-term bond market. And the policy of the Fed is actually destructive because the long-term bond market is very important for capital spending and especially for the government. The government has to borrow money. And some economists in the US say, well, debts don't matter. The government debt doesn't matter. But no, it does matter because now is already over $1 trillion in interest expenditures every year. It's larger than all the defense spending. It's larger than discretionary spending. So it does matter. And in my view, the Fed has maneuvered itself in a very unpleasant situation. And let me explain to you why. The Fed has, over the years 1980, this is 81, the bond market made a low. The interest rates were at the highest when the 10-year Treasury was over 15%. Deposit rates at the time were 20%. Since then, interest rates have gone down, and the Fed then pushed interest rates artificially low in the period 2018 to 2020. And they didn't realize that inflation was accelerating. So the 10 years fell to 0.53% in August 2020. Since then, inflation has been accelerating upward, and consumer prices have been rising, and also interest rates have been rising in a long-term cycle. You understand? Interest rates and inflation move in long-term cycles, say 40 years. These cycles are called Kondratiev or whatever, but they move in long-term cycles. In my view, we are now in a long-term cycle of accelerating inflation and rising interest rates. Now, can we have for the next 6 months interest rates coming down somewhat? because there is a recession? Yes. And how do we get the recession? In my view, if asset prices go down, in other words, housing prices and stock prices and cryptocurrencies and so forth, the wealth effect will be very significant, and people will cut down on their discretionary spending, and that will lead to a recession. And in that environment, I think interest rates can go down. But I don't think they'll go down to zero, as we essentially had in the years prior to the COVID. I think we may drop to 4% on the 10 years or 3.5%. But even at this level, 4.7%, you mentioned, interest rates are not very high by historical standards. You understand? I started to work in 1970. Interest rates on long-term bonds were over 6%. They went already in 74 to 9%. And then they dropped again when finally they peaked out at 15.84% in September 1981. And when I started to work, and this is an important question that you asked about financial markets. When I started to work, and in the 70s, the stock market capitalization as a percent of the economy was 25% in America, okay? So when you have a small financial market and the big economy, when the financial market goes down, it doesn't have a very negative impact on the economy. But nowadays, the stock market capitalization in the US is something like 160% of GDP. In other words, the financial market is this big and the economy is this small. The financial market is much bigger than the economy, and the speculation is huge. The volume of options and so forth is enormous. So if that contracts, then it will have a very negative impact on the economy. I guarantee you.
Yes, definitely. And you mentioned at the beginning, answering on this last question, that we are still in kind of a elevated inflation environment. The last CPI print in the United States for November was 2.7%, so quite significantly above the 2% inflation target of the Fed. Do you think that we might see in the coming months a second bigger inflation wave in the United States, at least like in the 1970s?
I think, and you may censor me, but the reality is simply that no household lives with a 2.7% inflation rate. Most households, they live with an inflation rate. And by inflation, I define this as a cost of living increases. Because there are many different ways how to calculate the price increases, inflation. The government lies about inflation. They understate inflation widely. John Williams, he publishes the shadow statistics. He has an inflation rate of over 10%. I think my inflation must be between 5 and 7%, something like this, but never the 2.7%. Look, in America, what is expensive? Car insurance and house insurance, interest rates, and interest rates. Again, for the poor households, they have debts, okay? So when interest rates go up, the poor households, they suffer. The rich people like I, we have deposits. I pray every day that interest rates go up so I get a higher income on my deposits.
That's very true, Mark, actually. If I can add on your point here, because here at PFI, what we did is that we have divided the consumer basket between essential goods and non-essential goods. And essential
Yes.
goods are housing, food at home, household energy, public transportation, some education, and some health coverage. And what we have seen is that the inflation of the essential goods is, as you say, between 5 and 6%, while the inflation of non-essential goods is barely flat. And this is why the overall inflation rate is at 2.7%. But as you rightly mentioned, the things that people need in their everyday life is not 2.7%. Now, let me here add a point on inflation. With the upcoming of Mr. Trump as the next president and the geopolitical tensions and the trade wars are going to be more severe between China and the US, are we facing a negative supply shock that is going to hit the global economy? And this is what is going to explain maybe the new wave of inflation in the US and in the other industrialized world.
Yes, it's a very good question. I mean, first of all, we are in war times. We have war in Ukraine and we have wars throughout the Middle East and so forth. And wartime economies, they all have higher inflation rates. There's no question about this. And two, you hinted at the trade war. I mean, I don't think that Trump can implement his tariffs because usually there are too many exceptions in the US. And if I look at the composition of his cabinet, you know, the ministers that he appointed, all of them are like billionaires, rich people. Do you think that they want stocks to go down? You must be joking. They all want stocks to go up. And so the policies of Trump, in my opinion, will be watered down significantly. And I will not rule out that, you know, the US realizes, I mean, Trump is, I have no great admiration for his intellect, but he's a street smart guy. You know, he's a kind of a uneducated, but some common sense that he makes a deal with China. You know, we are now good friends and you stay away from influence in the Middle East and in Ukraine and so forth. So we kind of divide the world between China and the US, and we are on friendly terms. I wouldn't rule that out. And I, Mr. Trump, I can build a few hotels in China.
True, correct. But in this world of uncertainty, we are already seeing some industrialized countries' economic and political situation falling apart. Like, for example,
Correct.
Germany, like France, most recently Canada. The Canadian Prime Minister has resigned, and the Canadian economy seems to go into a slowdown. So, what do you say first about the the Eurozone? Do you think that the Eurozone, with the next crisis, is going to be able to survive for the next 10 years? The Euro is going to stay with us?
I'm not a central banker. I'm not the ECB, and I'm not the Eurozone leadership. You know, I'm not Ursula von der Leyen. I mean, this is a testimony that democracies do not work because it's a mob rule. It's ruled by idiots. They vote for the most incompetent people you can imagine. Trudeau is a complete nonsense person. He got elected 3 times, 3 times. You know, I could have forgiven the Canadian to vote for him once and then kick him out. 3 times he got elected. And you look at France, they have Macron. What a joke. No Frenchman likes Macron, not one. And the industrial policy in Germany is a complete disaster. When I grew up, Germany was das Wirtschaftswunder, the miracle of economies, because it grew rapidly with no inflation, had a strong currency, everything. And what did this government do over the last 5 years? It committed economic suicide. Economic suicide. Hard to believe. But I know the leader of the AfD, Alice Weidel. And I said to her, don't you have rich donors, rich people that give you money? She said, no, they're afraid. This is the state of democracy in the Western world. They're afraid to support parties that are, the press, the media calls them right-wing. The media says they're extremist right-wing. For me, they're center. I am more on the right than all these parties in Germany and in Switzerland. I'm far more to the right.
You're right. They seem to be...
Because I studied history. I'm interested in history. I can tell you what is happening at the present time in the Western world is economic suicide. Financed by the central bankers. Yes, financed by the central bankers.
Well, it seems that there is a total disconnect between the politicians and the bureaucrats, especially in Europe, and with the public. And as you mentioned many times before, central banks are rarely right, and they commit mistakes that affect the society. One of the impact that you have mentioned before in our podcast is the wealth and income inequality and the concentration of wealth. It seems a lot of things are being concentrated in our days, but one of them is wealth and income. What would be the major implications for society and for working class in particular? And if this disconnect continues between the public and the politicians, we might have, at the end of the day, social unrest. What do you think?
This is most likely going to happen if the policies as they are continue, that will get social unrest. And two, the problem with industrial concentration is that at the end, you end up with one or a few companies that dominate industries. And they behave then like monopolists and prevent newcomers from gaining market share. You understand? They stifle innovation. They don't want. Capitalism is a dynamic process where continuously companies go bankrupt. That's good because it allows new companies that are more efficient to come up and succeed. So in the capitalistic economy, it's dynamic. It never stagnates, never. But the current crony capitalism that we have leads to some stagnation because the big companies dominate entire industries. And in America and also elsewhere, I observe small business owners are driven out of business by the big corporations. Now you may say, well, the mom and pop shop in the street gets eliminated because they're not efficient and can't compete against Walmart and Dollar Tree and Dollar General and so forth. That is true. But at the same time, if regulation makes it difficult for small business owners to actually open a business because there's too much regulation. You understand? If Starbucks goes into Prague and opens shops, they have a lawyer, they have people they specialize in water, they have people specializing in noise, they know the regulation and so forth. You and I, if we open a coffee shop, it will take us 3 years because the regulation is so difficult. So they have a competitive advantage because of their size. and because of regulation that makes it difficult for small people to survive. And I've seen this in Thailand. During COVID, all the small shops had to close down, except like 7-Eleven. They could stay open because they're owned by some rich guy with connections.
Very true. And especially when real interest rates are kept in negative territory or close to zero, you don't have creative destruction of capital.
Yeah, absolutely. Yes, you keep them alive. That's the problem.
Very true. We would like to have your opinion about a subject that is now very hot in the market, which is the creation of a new reserve currency that is going to compete with the US dollar. Now, we know that the US dollar is sitting on a system of deep financial markets, and the US Treasury market is massive. So, but from the other side, also, we see that there is a lot of countries in the world, they don't trust the US dollar system, especially after they seized the assets of the Russian government, rightly so or not. But the impact or the outcome is that they seized the assets of the Russian government. So a lot of countries are starting to build their reserves in gold. What do you think about the emergence of a new reserve currency?
Well, you're an optimist. You said that there are many countries that don't trust the US dollar. I'd say you have to be crazy to trust the US dollar, because if you hold assets as a country in the US, they can any day blackmail you and take it away, as they froze the assets of the Russians and so forth. And not only the Russians, of others, they've frozen the assets as well, including Afghanistan, one of the poorest countries in the world. They seized the assets. So nobody trusts the US dollar. But in the meantime, let's give you my example. I managed portfolios and I managed my private assets. I hold more US dollars than any other currency except gold. But the other currencies are even worse. I mean, what is good about the euro? Look at Mrs. Lagarde. She's a complete incompetent central banker. Not that Miss Yellen was any better, that Mr. Powell is any better. The last good central banker in America was Paul Volcker. Greenspan was a very intelligent man as a central banker, but he is establishment, he's the deep state. He financed happily the expansion of government through monetary policies. But he was better than what came after him. Bernanke is a money printer. Bernanke belongs into Zimbabwe. Robert Mugabe is his ideal, the money printer by excellence. Okay. He went to the Mugabe economic school in Zimbabwe.
So you don't see a reserve currency, a new reserve currency competing with the US dollar. It's not possible for the right time.
I think, to answer your question, it's more and more trade will occur between Russia and foreign countries and China and foreign countries without clearing in the US. So the US dollar, the reserve status of the dollar is in decline. And it will, in my opinion, one day accelerate massively, because economically seen, the US dollar is grossly overvalued, not a little, grossly overvalued, economically seen, compared to currencies like in China or in Asia in general. But in financial terms, it's not terribly overvalued. So what the US could do one day is, many countries have done this before, as you know. They introduced a dual currency for financial transactions and for trade transactions. It's a failure, it's a disastrous policy, but countries have the tendency to embark on disastrous policies like money printing. Every society in history ended up printing money because it's much more convenient to print money than to tell the voters, oh, we have to increase taxation, or tell the voters, we have to cut your benefits. Your pension fund, instead of getting 100 a month, you will now get 60 a month. Politically, in a democracy, it's not acceptable. The democracy is a failure because the policies that lead to inflation are very popular. You get money from the government for this and for that, free education, free healthcare, but the tax that is paid on that is inflation. Inflation is the tax, nothing else.
True. I agree. We agree very much with you that the inflation is the most hideous, actually, hidden tax.
The horrible tax. It touches poor people much more than rich people.
Very good. But to go back to our subject on the reserve currency, if these countries, they're going to start trading between each other in a currency that is not the dollar. So that means that the global demand for the dollar is going to drop. And two, these foreign central banks, they would not have to hold dollar in their reserves, which means also that there will be less demand for US treasuries, which also means that they're going to rely on domestic savings. What do you think about that?
What I think about it is that I don't know.
Yeah.
Look, if you ask me, how will the world look like in 5 years? I have no clue. The only thing I know is once a government begins to print money, and once you have the fiscal deficits as we have, it's very difficult to get out of it without a significant adjustment in standards of living. In other words, you go through a crisis phase. And I think the governments in democracies want to postpone that. So they will print money. And as long as they print money, the purchasing power of money will go down. That is clear. Now, what will protect you? I suppose that some sort of real estate can protect you. Real estate that is good value. In the countryside, real estate is good value. And in the cities, in Europe and the US, it tends to be overvalued. And two, I suppose that precious metals can protect you. I don't think that gold is that cheap, but is still my largest position. And three, it is possible that future currencies will be sort of crypto-similar currencies. The difficulty is to decide which crypto, because as you know, we have thousands of different cryptos in the world. And in my view, cryptos are a wonderful scam.
Okay, but now we are entering a very important subject, and this is how we're going to conclude our podcast with you, is that in the world there is...
You're getting tired of my views.
No, not at all. Actually, we have very, very similar views, Mark. Very, very similar. It's just I'm not daring to call the politicians and the central bankers idiots. But anyway, now that we are going to our last subject, which is actually the most important, is that the world economy has about $330 trillion in debt. We have about $100 trillion in global GDP. We have debt situation in many countries like unsustainable, like the US, like France, like even like, Japan. How are they going to do that? How are they going to pay back all this debt? And in our opinion, the only way, as you mentioned, they're going to print money. There's no other way. What do you think about this subject? Are we going to live a long era of financial repression?
My sense is that the debts cannot be repaid. There's no way. So as you suggested, I think they will continue to print money. But of course, one day there will be a massive crisis and defaults. It's going to be very messy when it happens because, say in the US, domestic pension funds, they own treasuries and all sort of agency bonds from the US. So if the government defaults, then the pension funds cannot pay the benefits and so forth and so on. But they could say, well, we stop paying interest to the foreigners. Is it possible? But again, it will be very messy because then nobody will trust to hold dollars in the US. You understand? So the consequences. I mean, I studied financial policy, and my thesis for my PhD was about the financial reform of Robert Peel. And I studied under a professor, among others, called Heinz Haller. Haller was the intellectual behind the value-added tax. And taxation is very, very complex because you can increase the taxation on Marc Faber, but I can roll it over to somebody else. So in the end, somebody else pays the tax and not me. It's like the rich people. They benefit from inflation, whereas the poor people are hurt. But this intervention, I am against any intervention by the government because it's very complex and we never know exactly what the consequences will be. The only thing I can say, the current financial market expansion, which is much more rapid than the economic expansion, is not sustainable in the long run. Now, someone will say to me, well, your debt, okay, but you said debt was a problem 20 years ago. Yes, that's correct. I said it already 20 years ago. It's just become more and bigger. And in the end, what you suggested, the government will have no option but to print money because they will need the money to pay the interest on the debt. So they have to print money to pay the interest on the debt. And that is by itself very inflationary. But as you know, the world is complex. You may say the last 5 years we have a lot of inflation. Yes, but what went down are commercial property values throughout Europe and the US. And massively in the US in this period of booming housing markets for families. The residential market is booming and the commercial market has collapsed. The buildings you can buy for $10 for nothing. They give it to you. I've seen buildings, nice buildings in Los Angeles, down 70% in 5 years.
Very true. Listening to you and to your views, Mr. Faber, and is to come with a conclusion that we are living in a very uncertain world, and we're gonna see a lot of volatility in the financial markets. Do you agree with that?
Yes, it's a more complex world because we have these idiots in government. So you never know what, there are philosophically views that evil, people who commit crimes, they do it with intention to damage somebody else. But what about people who are stupid who damage somebody else? Shouldn't they be punished equally like a criminal? Stupidity.
Well, in my
I
opinion,
mean, maybe in the Czech Republic. By the way, I went to the Czech Republic probably before you were born, namely in 1968. When the Russians I arrived I think it was August 18th, 1968. On the 19th, the Russian walked in. And I stayed next to the broadcasting building. So the tanks were surrounding my car, my Volkswagen car as a student. So, but maybe you have good politicians in the Czech Republic, but I can tell you, the only good politicians we have in Europe is Putin. He's a smart guy.
well, yeah, it's a sensitive subject, but you have your point, and a lot of people in Europe and in America, they do agree with you. And this is why we are seeing this rise in as they call them, the right wing, but there is unsatisfaction with the policies, especially in Europe. I would like to ask you to end this podcast with the conclusion and a view, or to be a bit optimistic about the world economy. What is
Optimistic view.
what will change and will make us a bit more optimistic? What event might take place?
Well, I want to tell you, the world is now at the very interesting juncture, because in Argentina, you have a president who essentially cut the government expenditures and reduced the budget deficit and has lowered the rate of inflation, and the stock market went ballistic. I mean, a year ago, I was recommending people to buy Bank Macro. Is quoted in New York. And since then, the stock has gone from about $20 to $120. That shows the capitalists, and it shows the rich people. If they want booming stock markets, they have to bring their house in order. And one thing that is common to the world everywhere, people like money. They like to make money. They like to work. They want to have responsibility and so forth. They like freedom and so forth. And in my view, we could have in Europe a move to the right. If the move to the right occurs, and we had it in Italy, we have a move to the right in Italy, then I think that asset markets will do very well. And in Asia, as I said, we have good value. I mean, I have most of my money in Asian stocks, also Indonesia, Thailand, Vietnam, Malaysia, Singapore, and of course, Hong Kong, because I think that Hong Kong is still a city that functions. The bureaucracy is very limited in Hong Kong. The government is about 15% of the economy. Compare that with Germany or France, it's close to 60% of the economy.
Yes, true. We thank you very much, Marc, for this interesting podcast. And we hope to have you again in the next few months if your time allows. Thank you very, very much. And we hope to see you again. You want to show us a book?
Yes.
Yes, please.
This people should read.
Yes, you are right. We know this book.
Schumpeter.
Yes.
Of course, the academics at the Fed, they never mention Schumpeter. They never mention Hayek. They never mention Mises, because these people were against government interventions, all of them.
Well, very true, because they are all Keynesians or new Keynesians, the central bankers, right?
The horrible neo-Keynesian.
Horrible neo-Keynesian. Thank you very much, Marc, and it was a pleasure, and we hope to have you again. Thank you.